All right, hey traders, I hope you enjoyed your holiday weekend. I did take it off myself. We didn't do the live session, spent some time with family. So because of that, I have a lot I want to cover today. I want to talk about broad breadth, market breadth. I want to talk about some investment ideas. I want to talk about gold. I want to talk about Bitcoin. I want to talk about the discombobulator that I just made a video. Guys, go check that out. I'll have a link below of the video on high-powered microwaves and laser direct energy weapons. I just made a longer video on the channel talking about this, and now we're getting reports that it was just used in the operation to save the U.S. downed fighter jet pilots in Iran over the weekend. This is a big theme, and you need to be paying attention to the words cost per shot. And really, the economics of war is what I'm calling it. There's a major shift and an imbalance where the U.S. is spending billions to shoot down $30,000 drones, okay? It's a big deal, and I think there's a very big opportunity in this space. I think it's still pretty early. Now, the charts are, some of them extended, but there is structure that they're still holding, presenting some opportunities that we will get to later in this video. For now, let's start with breadth, as we do like to do, and looking at the SPY, we remain in a solidified downtrend. Yes, it felt good for a couple days, up days. Well, guys, we haven't even taken out a recent lower high, and guys, we're still below the 200, so anything that doesn't look like this, taking out that high and then making a higher low and getting back up through the area, maybe even building above, I could care less about upside at price action. The situation is still very unstable in the Middle East. We don't know what's going to happen with the price of oil. We don't know what's going to happen with any escalations. So guys, what you must do is never speak in absolutes. You don't know what's going to happen, period. I don't care what anyone is telling you. You don't know what's coming next. So what you can do is trust that the markets will price it correctly, okay? And we are in a solidified downtrend. So any fade from the current move is an opportunity. Let's clean it up. This is a short opportunity that I am looking at. I am looking at reinitiating a short position on the market as we have lost the daily, weekly, monthly level. All we're doing is popping back up. If we fail the 200 and roll back down through the 9 EMA, which will be about here today, I'm likely to initiate a short position. Now, I don't know exactly what I'm going to do, guys, in Bootcamp. If I'm doing it tonight, I will go live, or at least be talking through it live at the very least. But it's on my radar. I am paying attention. I was looking on Thursday as well, but I just, with the holiday weekend, I didn't force it. I did put an order out, but I did not force it. I was very greedy in that order, and the vehicle that I'm looking at is XLY, okay? Consumer discretionary. If oil remains elevated, I expect that to roll over to the consumers. We've lost everything here. Major support. We're popping back up into what was support is now resistance, okay? Another up day or two that rolls back through the 9, I will consider taking a short here on consumer discretionary, with my stop being whatever the high of that sequence is, entry to our target, okay? So that's something I'm looking at, something I'm considering. There's a couple other names on my radar, but back to market breadth here. Let's look at the Qs. Same deal here, guys. I know everybody wants to pick bottom on tech. If you're investing, we're going to get into that. I'm going to show you a couple signals that I'm looking at from an investment standpoint. I'm almost there on some, and for others, I don't think that we're at max pain, okay? I have not seen a capitulation signal. I think that there could absolutely be more downside risk here in the market, pulling back to at least prior cycle highs. So, guys, I'm not going to go calling bottom here. The Qs, tech, if you will, would have to get back above the 200, pull back, make a higher low, and push back up through the area. I might consider initiating some long exposure or some long-sided risk in that scenario, but we're not there, okay? This is a lower high threat that if it rolls, fails to 200 and rolls, you can see it, right? Risk, entry, target. That's what I'm looking at, all right? From a 3-day to 3-month standpoint, I'm going to trade with the momentum of the market. The markets are in a downtrend, and IWM as well. This is holding up decently. Again, I said that in one of the videos last week, and this is holding up decently, but if we don't get this whole thing straightened out and oil continues to rise, we still have a threat of rate cycles, even rate increases coming back, then I expect the small cap world to crack as well. So again, another possible push back up into what was support, now resistance, and a roll would make this a short risk target, okay? So that's what I'm looking at in the markets, and jumping over into what I just mentioned. I want to make this quick. I did make a video again. I will put the link below in the description, but direct energy weapons, all right, and these HPMs and lasers to be specific. It's a new defense technology that is lowering the cost per shot. So the US or other Gulf state nations are spending billions, millions to billions to counter $30,000 drone strikes from Iran heading into multi or deca-billion-dollar assets. They're hitting these refineries, causing tens of billions of dollars in damages, possibly years of having these things offline with a $30,000 drone. That's an imbalance, my friends, okay? It has to do with the economics of war. It is a big deal, and it's a theme you should be paying attention to. So go watch that video after this one. Just a couple of the names that I'm interested in this space. We've got RTX here. It's the same thing that I always talk about. I want a leader in a trend backed by growing fundamentals, or a catalyst, I've been saying lately, since there's such a major catalyst, but this has both. Okay, it has R&D allocations, it has real world deployment, it has a catalyst, but more importantly, my friends, it has structure. Retracement, reaction, remount. Retracement, reaction, remount. Retracement, reaction, remount. Look at all of the triple R's. Go to the weekly. Look at this structure and these opportunities when this thing pulls back. So we're looking at a possible weekly triple R trigger: retracement, reaction, remount of the 9. This is on my radar. There's a couple other names in the space that look very attractive as well. This is TDY. I mean, guys, absolutely beautiful. I don't want to spend much more time on that because I just did such a long video on it, but pay attention to the theme of direct energy weapons, HPMs, laser beams. It's real world. It's here. Now, rolling into, I want to talk about gold. I don't talk about that so much on this channel, but it's at a place where now maybe I'm starting to get interested. I like it most here on the weekly and getting through last week's high. So I talked about this. A lot of people were asking me in this down move, like, hey, should I get gold? And it's like, look, if you're investing in gold and I don't care, frankly, I don't care. I'm a swing trader, okay? I'm not investing in gold. It's just, it doesn't get me excited. I've taken some trades in this up move and done well on those trades, but I'm not gonna lock money up in gold on what could be a blow off top move. And if you zoom out to the monthly, look at the other times that this has happened. For me, I think there's just a little bit more of a threat of tying your money up for decades in this first one, or years. I mean, for over a decade, in this sideways consolidation. Look, the move happened. The move happened. Now, could there be another move? Should this be, repriced due to the current geopolitical environments and all that stuff? I don't know. You guys, okay? I'm not claiming to be a gold expert, but I am a TA expert, and what I see here is a possible retracement, reaction, and a remount of the 9. So that's my trade if I want to take it. What I said when people were talking about this down move and buying it, I said, well, let it push up, okay, and set a new level, and then pull back down, and if it doesn't make a new low, then back up through the area. Sure, we can take it because we've got ground rules, something to risk off of. So that's the trade on the weekly. I'm, you could say maybe a fan of the weekly look here on gold, and I like it right there through last week's high. I don't know that I would give it this much risk personally. You've got your defense candle here and then a continuation candle last week. If we trigger here this week, I think last week's low would be my stop. And then, you've got top of range, possibly up into all-time highs for target. It's on my radar. I will control my size. I'm just not a huge fan of the metals market. And then Bitcoin, the next one I want to talk about here, same thing I'm getting a lot of questions on. Let's go over to the daily. And I mentioned this still looking like a bear flag, but it's, maybe it'll get moving. But my point here is let it change character. Okay, and build above. Let it convince you. Bitcoin has a way of convincing you when it's ready to go. Okay, because of course there's still a threat that we break down on this thing and come back, maybe sweep this liquidity. We'll see, but it just hasn't done it for me yet. And what I want to say is just let it happen is all I want to say. But you could look at this last move when I was saying, guys, this is a bear flag. It looks pretty nasty. If we lose this bottom trend, we're likely to retest prior cycle highs. It's exactly what we did. And just, a week and a half, maybe less than that. And what I'm trying to say here is it might have felt like it was hard to get into that trade on the daily chart. Okay, so guys, roll it over to the hourly. Go look at the same move. We had our daily trend and structure. I know there's a lot of lines here, Well, we're looking at the daily breakdown that happened right here. It broke down, confirmed on the daily. All right, so roll it over to the hourly chart. You get a trend, retracement, reaction off of the 50, the prior swing high, and it rolled. There's your triple R entry to the downside. Okay, so it's the same thing. If you're feeling jumpy, like, oh, it's gonna go, okay, let it go, and then start watching the hourly or the 4 hour and find your entries there. Markets are fractal. This is trend continuation. Yes, it works on the hourly. Yes, it works on the 4 hour. So if you want to get a little bit more involved, but I don't feel so jumpy here myself. Personally, I'm probably going to just let it do something like that before I start worrying about maybe doing some of the ETFs, swing trades. I don't think we are in the max fear that could possibly come from the current corrective market that we are in. All right, we're getting what I think might just be a relief rally, and if we roll back over, I think we're almost certain to retest prior cycle highs. It could even go further, you guys. We'll see. But what I'm saying is that from an investment, investing is easy. That's a hard thing to hear. I get it. But look, I'm just going to pull it over. I made this tool to absolutely, undeniably prove it to you. All right. Time in the market beats time in the markets. It's a saying that we always know. But I believe you can time the markets from an investment standpoint. I'm talking about the best companies and ETFs in the world. I'm not talking about anything speculative. I'm talking about Mag 7s, top ETFs, some other names like TSM, stuff like that. Like obviously that's not a Mag 7, but there are some other names that I have included on this curated list here as well. Oracle being one of them. Anyways, my point here, guys, is waiting for an RSI weekly 30 trigger. All right, that is a fantastic time historically to acquire the best companies in the world. If you don't believe me, just go in and run this simulation. We'll just do it on the spy. You can make all of your adjustments. It's all explained in the tool. Guys, just go play with this tool and run the simulation and see the historical return of waiting for weekly RSI 30 triggers or the monthly triple R, which we'll cover here in a second. But guys, I mean, there's your return since 2021. I wasn't investing until 2022. Snacks, okay, same deal. I mean, literally doubled your money. Oh, more than doubled your money by waiting for this timing in the market. And it is maybe we're going to get it again here, you guys. Let's go weekly. We had that relief rally, so that's we're probably back in the 40s, right? So yeah, look, guys, if the market rolls again, I expect that we will get a weekly RSI 30 trigger, especially if we come all the way down here, test prior cycle highs. It's going to be a pretty good time to be DCAing into longer term accounts, all right? It's a fantastic time to be doing so. So go use this tool, test things out. The other thing is the monthly triple R. Same deal. We can just look at any of these examples here and we'll do Netflix since 2019 when the monthly triple R happens. I'll show you that on the chart. Run the simulation. I mean, investing is easy. All right. So Netflix. Now, Netflix did just have a weekly triple R trigger that the alert went out. If you sign up for this tool, it's free. Guys, I send alerts when these things trigger. All right, you'll get an email alert saying XYZ is triggering on the weekly RSI 30 trigger or the monthly triple R. I have quite a few on monthly triple R watch. But again, guys, the Netflix trigger went out a couple of weeks ago. It's up over 25% since that trigger. Microsoft has triggered twice recently on the weekly. We'll see if this thing can get its footing. I believe in Microsoft long term. But look, guys, let's talk about the monthly triple R trigger. And you can see the marks here of other times that we have had a monthly triple R trigger here on Microsoft since about 2014. And from a DCA standpoint, all of these work. But if you wanted to put a swing low on this trigger here, it obviously breached that. A few months later, we got another one. So anyways, guys, this is a retracement reaction right off the 50 on the monthly. Back over the 9, that's on watch. We've got Netflix here as well. We've got Amazon as well. Apple, I think maybe even. Nope, that one's still above. We've got Meta. Look at these things, guys. These are opportunities from a long-term footing. These are opportunities to average into the best companies, ETFs in the world. Tesla, I believe, is on the radar as well. You've got XLF if you just want to broadly do financials. You've got JP Morgan here trying to trigger. Guys, look, that's all I want to say. Go check out the Tom tool, sign up. It is free. You will get alerts as these things trigger. But going back to, this week, We'll see, guys. We'll see. I'm favoring this scenario here where we fail the 200 or somewhere around this recent swing high, lower high again, more specifically, and roll over. I'm going to be watching that. And then I do want to watch the aerospace and defense sector for the themes that I discussed. HPMs, laser beams, direct energy weapons, cost per shot, economics of war. Guys, go check that video out, but I think that's enough for today. If I'm going to take that trade later on, let's look at it again, XLY. Yeah, it's on the radar. Let's check out a couple more ETFs here and see if anything else is catching my eye. Communications, that could be another good short as well. I mean, guys, look at this. We've lost all structure, okay? We're coming back up. If we fail the structure of the 200 and roll back down through, it's a retracement, reaction, remount. The 9 would be about there. There's your stop. There's your target. 2R. I'm talking about in and out in a week or two. Getting some puts, trying to make anywhere from 60 to 200% on the position. That's what I'm looking at, guys. We got utilities still holding up decently. Real estate, I'm pretty sure I'm not interested in that. No, I'm not. Materials. This is starting to get interesting again. Healthcare. There's one. All right, you lost everything. Breakdown, retracement, reaction. If we remount, get back down through the 200 on this one, stop, target. All right, so there's some short ideas just going index-wise. Of course, you can go into these things and find maybe the weakest companies in them that have gotten a little bit of a sympathy move off of the rally late last week on a holiday week. If we stuff into the 200, I'm sure there's some names that are quite attractive to take down. Some other sectors that are trying their best to hold up, I would say, is uranium here. You've got a bit of a retracement reaction, remount, possible triple R. I like it through last week's high. I mean, I don't hate that at all. All right, bit of structure there, but remember the market that we're fighting. We've got the Mag 7s here. Let's go to the daily. Yeah, guys, this just, I'm not too attracted to what I see out here. Retail, haven't completely lost it. I would say if this breaks down and then does that, that would be a short that could come in the next couple of weeks if we do really get a deeper correction in the market that has followed through the downside. Then we could look over to retail or some of the retail names. Let's look at resources. This back over the 50 could be attractive, and that might align with the metals trade that we were talking about. So I can see that. I'm sure I'll get some questions on it. Home builders, I think that's bottom of range. Yeah, nothing to do with this for now. Semiconductors, now this matters. This matters, you guys. If we lose this again, it's obviously going to weigh heavily on the market. So we lost our major support. We're simply popping back up into the 50, rolling back down. What do you think I'm going to say? Entry, stop, target on semis. All right, I don't know if that's the vehicle that I would choose. Semis can be one of the first to move, right? If we do get great news out of the Middle East, I saw some stuff, something about a 40-day ceasefire or something like that, right? So I don't think I'm going to go shorting semiconductors, but the structure is there. I think the point there more generally is the structure of a downtrend or a resumption of a downtrend in semiconductors. That's a statement on the general market, all right? This was the vehicle that I tried last month, I guess you could say at this point. I had to get out of this thing. I actually took a loss on it, even though it nearly hit my target just a couple of days after I got out, but it just hung up a little bit too long. I should have got another week or two, or maybe even just rolled those contracts. I didn't do it. A little bit frustrating on that trade, honestly, because, it was just a textbook break of structure, come back up, retest the 200, fail, roll. Guys, it's what I said this entire video about short-sided price action. It's what I'm looking for the next leg down in the market, if that is what we are to get. And I just realized that cicada has been screaming, so I apologize if the audio of this video sucks. Let's look at consumer staples and cut this thing. Yeah. Guys, we're one more financials here. A little bit of strength coming into tech and financials. That's something we should keep an eye on, but frankly, nothing has been done here. All right, there's a lot of work to do to get these things back onto track. Yeah, we're in a downtrend. Respect it. Don't fight it, guys. Stay safe, manage your risks. Let's go make some money. All right, keep it tight. Keep it tight. We're in a downtrend. Don't force it. I'm looking at downside of price action, 3 days to 3 months. maybe initiating a new round of shorts on the market this week. We'll see. We'll see how things look. I think futures was looking decent, holding up, but it's only going to take one headline. Apparently, the timeline on the U.S. striking the energy infrastructure in Iran ends Tuesday. So more headlines, headline-sensitive environment. It's tough out there, you guys. It's tough. All right. Current administration doesn't want to see the market go down. There's a war. There's oil. There's implications all over the place and a lot of headlines coming out. So size it back, control your size and your position count, and don't predict an uptrend that we're not in. We're not in it. All right. So I'm not going to gamble. I will wait until we get that change of character and confirmation. I'll see you guys soon.